If you wish to become a profitable day trader in 2025, then listen up. I'm about to uncover exactly how I've made $100,000 in the space of one day by simply understanding basic trading fundamentals. Please understand, in order to master the art of trading, you have to understand three key concepts. The first key concept, which I believe is the most notable concept that had really allowed me to make such returns in a short period of time, is market structure. By understanding market structure, you are allowing yourself to understand and potentially predict the general movement of the market. By doing this, you give yourself a huge advantage, as market structure is the overall order flow of the market. It provides us with a mechanical framework to read and understand price. When you've nailed it, it massively increases your probability of understanding where price is likely to go next. But not just that, it will also help you understand the behavior that price will take in order to actually get there. The next significant concept, which will allow you to not fall into any smart money traps and essentially avoid inevitably losing trades, is liquidity. I really can't stress enough how important it is to understand liquidity. Liquidity is the basis of the market. Liquidity is essentially the ease at which a market can actually be traded without affecting its price. Think of it as the amount of supply and demand in the market. For every buy order, there must be a sell order, and for every sell order, there must be an equivalent buy order. With that being said, price continuously seeks pools of liquidity in order to rebalance the market. Think of liquidity as this magic analytical tool we can use in order to understand where price is going. Think of liquidity as this analytical tool which we can use in order to see where resting pools of orders may be sitting. Think of it more or less like a magnet which price is attracted to. Now, before we do get into these final concepts, I would just like to say that I teach these concepts for absolutely free inside of my op group. If that's something you'd be interested in, go ahead and join up for absolutely free using the link in the description. Now, moving on to the final concept, we have institutional supply and demand. History has repeatedly shown us that on aggregate, traders tend to be a very, very emotionally charged group. So when millions of them get together in a highly emotional game of fear, greed, and uncertainty, their combined behavior takes a rather interesting but herd mentality. Now, to simply put it, currency exchange rates move up and down as a result of supply and demand from market speculators. Every day, investors and traders, whether that's retail, i.e. private individuals, or institutional, both all buy and sell currencies. Now, everybody is buying and selling for their own unique reasons, their own unique ideas, their own unique beliefs about what the currency pair in question is worth. Now, one thing that's extremely important to note is that the meeting point between buyers and sellers is what we call price. No trades can actually take place unless both the buyer and the seller agree on a price. This is essentially what drives currency pairs. The market runs like a continuous auction throughout the day, whereby there's constant competition between buyers and sellers to get the best possible price. I've left in the description a completely free document which is going to give you each one of these concepts in much greater detail. Go ahead and click on it and make sure you give it a read, because that will most likely exponentially increase your trading ability. Now that you've understood these three concepts, let's combine them and devise a high probability strategy with a good enough risk to reward and a good enough win rate.
Now, the first example I'll go ahead and show you is going to be this example over here. Now, from what we can see, market structure is bearish, and this is where market structure plays in. We can identify that market structure on the 15-minute time frame is quite clearly bearish, meaning the goal here is to understand that we're going to move in a bearish way. So how does bearish market move? Well, it moves like this, right? It makes those pullbacks. And essentially, the main idea in a bearish market is to literally try and intercept this pullback and try and get in on a good time and have your stop loss just above a particular zone over here, targeting this break of structure right over here. And that is essentially kind of our ideology behind why I took this trade. Now, granted, yes, there are a few other things that play into it, but this is why I'm saying understand institutional zones, understand market structure, and also understand liquidity. We've obviously closed our break of structure over here. My expectation now is that price is going to facilitate some sort of pullback like this and then continue moving bearish. So what did I do? Well, I waited for a particular zone to occur. As we can see here, we have a 15-minute fair value gap, jumped onto the 5-minute time frame, and I waited for price to essentially take this liquidity out, which essentially gives institutions enough liquidity in order to actually push the downwards move. So what exactly happened? Well, as we can see here, liquidity gets taken out, we get tapped into our trade, and we target the break of structure, which is going to be over here. And that is exactly what ends up happening. Price takes that break of structure out, continues moving bearish, and then you can say it starts to pull back like that. So let's see, bang, and then price continues bearish as well, and even takes this liquidity out once again. Obviously, that was most likely news. Let me show you guys another example of a trade that I had taken. Let's go ahead and look for this together. This was a loss, but like I said, this isn't sunshine and rainbows. Exit replay mode. I took this yesterday, right? Okay, so this particular trade, what we can see over here, price leaving the DR and IDR range, causing that market structure shift. I get enough confirmations to enter the trade for around to 4.47R after price had actually displaced the DR and IDR range. Now, funnily enough, right, I'm entered into another trade right now. I will keep you guys updated. Hopefully tomorrow there'll be another video. It will tell you guys as to whether I won this trade or I lost this trade. So stay tuned for that. Another trade over here that we took, obviously leaving the DR and IDR. Obviously there was no trade over here simply because we didn't see anything suffice that gave me good enough confluences to say, okay, look, I'm entering. We've got another trade over here, another one over here. It's quite simple. Like, just understand, you know, market structure. Understand if you're bullish or bearish. If we're bullish, this is essentially what we're trying to capitalize on. So either what you're going to do is you're going to capitalize on the pullbacks. If you're going to be trying to trade counter trend, and this is the leg that you're going to be trading on a lower time frame, this is what you should be looking for, something like so. And that is essentially what you'll be targeting, given, you know, a decent amount of confluences, and given that price actually pushes back into a particular zone that you've been interested in. So we could go ahead and do that and then place that over there, and that could essentially be your target. So really understand what you're playing. So swing trend is bullish, and we're going to be waiting for, say, something like this to happen. Liquidity gets taken, we tap back into a particular zone. This could be any zone. We form another zone, price taps back into that zone and continues moving bullish. An example of that would be, we have a high time frame point of interest over here, and once we've established that, we've got another point of interest over here. And as soon as we cause that market structure shift, for example, what we can go ahead and do is enter a trade and then have our stop just below here and then target like I wanted to. So that's kind of a few trade examples, a few things that you could actually go ahead and do. Now look, I offer one-to-one mentorship for those that are really wanting to actually take their trading to a completely different level. If you're interested in that, it's going to be the first link in the description. I do have to warn you, there are very, very limited slots simply because it is one-to-one. For completely free value, I have a Telegram group attached in the description, and I also, on top of all of that, I have a I have a lot of value in the description. Go ahead. It's going to take you to a page where you're just going to input your name, and I'm going to send over to your email. So go ahead and click. So another link in the description. So like I mentioned earlier, I also have market structure, institutional supply and demand, liquidity, how to pass challenges, all of that in the description. A lot of value summarized, which is going to help you trade. Go ahead and go over to the description, download that. All you have to do is input your email. It'll be sent right to your email. You can download it. If you are looking for help in any way, shape, or form, do reach out to me. My Instagram's also going to be in the description, and then I can also help you. Just send me a question. I'll reply over with a lube to hopefully help you out as much as humanly possible. That's going to be it from me today. Hope you guys have enjoyed this video, and peace.